Thanks for watching. I'm excited to introduce to you this new empowering series of non-traditional educational videos. This 200 series is an exciting series designed to teach you how to. I encourage everyone to review the 100 series. The 100 series gives you a general framework, fundamentals, and covers vital concepts necessary to apply to all our advanced level courses. Make sure you start in order. This course will teach you what it is to form a general partnership. We're going to take some time this week to discuss 1, how to form your general partnership, 2, how to structure your general partnership, 3, how to operate it, and 4, most importantly, how to take your compensation. Ready? Let's begin. Let's accurately define the term general partnership. It's a noun, and we're going to go with the statutory definition in Texas. A general partnership is created when 2 or more persons associate to carry on a business for profit. A partnership generally operates in accordance with a partnership agreement. Now, that's really important, ladies and gentlemen. You're going to find that the guiding document that determines how your partnership operates is directly reflective of this document. We're going to take the time to go over the articles and different provisions of it so that you can get a better understanding on how to grasp that. We're going to get into some important features. While all states carry unique requirements, the fundamentals of unincorporated entities are 1, not incorporated. 2, they're not filed at the Secretary of State. 3, because they're unincorporated, they'll generally be exempt from beneficial ownership information forms, a new requirement that came out as recent as this year. 4, tax filings are virtually the same as most limited liability companies because most will go and get a Schedule K-1. And the final, which is 5, they offer the same limited liability as a member manager LLC. That's when the owner, who's a member, decides to also manage it, which is what most businesses are going to be. Our main goals for the course are as follows. We're going to teach you how to file. Then we're going to teach you how to structure. We're going to teach you how to run, and then we're going to most importantly teach you how to take your compensation. Remember, this is for an unincorporated general partnership. One of the things I want you all to focus on is why we're forming the right entity. The central attributes for a professional hustlers organization must be nimble, adaptive, with as little red tape as possible. This is not because we are attempting to skirt the system. This approach is required because hustles are often unique circumstances which do not repeat, i.e. a project. Overinvesting into corporation compliance, excessive filings, and annual dues over a project, which may last a few years, is not advantageous to professional hustlers. Professional hustlers are looking for legally compliant structures which can be opened, closed, or merged quickly. If you desire to maintain the structure indefinitely, where there is no excessive legal exposure for non-related projects, then you can do so without excessive maintenance costs. I'm sure everyone's been itching to get to this. How do you file for a general partnership? If you're not at the Secretary of State, where are you going? I'm glad you asked. The biggest myth is large fees are required to organize. Here, I want you to focus on the most important things, which are addressing your regulators. They consist of the following. 1, your county government. 2, your municipal government, if applicable. 3, your banking regulator. 4, your tax regulator. County governments and municipal governments are concerned with occupational licensing. Write that down. Banking is concerned with obtaining some type of third-party certificate to recognize your entity. That's going to be your doing business as form or your fictitious name filing. Your tax regulator needs to know who you are, so they need something called an employment identification number. You're going to get that from the IRS. You can get it for free. Let's go over how to structure it now that you know how to file it. Your primary guiding document is going to be something called a partnership agreement. Where there's a deficiency, the partnership agreements fall under something called the Uniform Partnership Act. This regulation applies to partnerships in 44 of the 50 states and districts of the United States. Its original passing was in 1917. Sometimes it's referred to as the Revised Uniform Partnership Act, or RUPA. This is really only relevant if you fail to properly structure a partnership agreement or there's some type of deficiency or some type of area is not covered. So that's why what we're going to do in the next section is we're going to take a little bit of time to compose for you exactly what a partnership agreement at basic level needs to compose. Your first section is called a preamble. It sets basic frameworks for definitions and expectations. Just like DNA, you're going to need definitions, a robust framework of capitalized terms that clearly tell you what you are, almost like a predestiny of what's already written in stone. That's going to be your next section. Within the frameworks of your articles, these are going to be things like capital distributions, managements, duties, powers and responsibility, winding up of the partnership, administrative portions, accounting, taxes. Articles are your basic sections that address all relevant points about business. Day-to-day operations will be very important, as well as restrictions. I don't think this surprises anyone. You're going to have the specific section for ownership. Within this context, you're going to talk about ownership of property, but more importantly, ownership of profit distribution. They can be different. This is going to be governed specifically by this section. Your distribution section is based on your capitalization. Who puts into the partnership and what do they do as their basis in order to justify their compensation? While it seems like common sense, nonetheless, we need a signature page. You're going to need signatures on both the agreement page itself, but most importantly, the distribution and capitalization. You're going to want a specific agreement that says, I recognize these are the allocations of percentages and these are the allocations of ownership. Very important. While your governing documents are always going to be your partnership agreements, you have to understand that it's not just a one simple document sign off and then we move on and off to the races. How you operate your organization needs to be professional. Just like corporations have corporate resolutions, and so do limited liability companies, partnerships, although not specifically required, should include these. What you want to do is create partnership resolutions for a specific type of situation. For instance, 1, a general resolution for day-to-day activities. 2, a resolution requirement each time a financial decision is made above a certain threshold. For instance, if you borrow a loan above $1,000 or spend more than $2,500, you need other people's permissions. 3, you need to have at least 2 people sign. 4, you need to file it in a records drawer or save it on a hard drive. 5, you need a simple majority if it's more than 2 partners in your organization. And finally, 6, you need to make sure you do an initial one, which says each person is responsible for their own taxes, not the partnership. I've been audited before, and I can tell you, it's not fun when the partnership is responsible for your taxes of another individual. Make sure you prioritize that and pass that resolution. And I bet you wanted to get to compensation, getting paid in full. I'm here to tell you that there's a way to get paid where, remember, you're not a business owner, you're a professional entrepreneur or hustler. How you get paid is important. Remember, you're not a business owner and you don't have a job technically. So you're going to have to do normal things in the normal world still. Like you're going to need to apply for an apartment complex or get a credit card. The difference between rejection and acceptance is a very fine line. And that's why we're going to teach you the importance of certain attributes. We all love K1 profit distributions and showing off how much money we earn, but that doesn't help credit and that doesn't help the regular world. You're going to have to self-employ yourself through W-2 earnings. You're going to have to pay payroll taxes. Don't forget that. This is my gross record for following simple advice, which has taken me to over $12 million in gross revenue throughout the years. This is not about business, but a self-employed career which answers unique problems with unique solutions. These revenues have costs, licensing, and certification requirements. Keep this in mind. Remember, employment can be self-employment, and you need a W-2 if you're going to function in the regular world. I'm excited if you've made it to the end of this video. This overview is designed to teach you how to form your unincorporated general partnership. Get an e-copy of my international best-selling book for free by clicking the link in the description. After you sign up, send an email after sign up and put this week's video code in. 201 in your follow-up email asking for your free ebook for watching this week's video. Again, this week's video code is 201. Each week the code changes, so stay tuned for the following video and educational course. No information in this course is designed to be a recommendation for investing, providing financial products, or financial advice. Please do not contact us for investment inquiries or any investment-related recommendations. This is a free educational tool to be used for informational and educational purposes only. And don't forget to like, comment, and subscribe. Hit the notification bell so each time I come out with a course, you can stay ahead of the curve and hustle hard. Thanks a lot. Check me out at ChristopherKLopez.com. See you next time, ladies and gents. Hustle hard.